Welcome, and here we're looking at the S&P 500 and the US indices, the European indices, and also the Asian indices as well are pretty much all going through the same sort of pattern. And the current pattern that we're looking at just through here is a little bit complicated. Well, it's not that it's complicated, it's just simply the fact that the wave count can deliver a few different types options in the count. So it's going to be very tricky to navigate the certain degrees of structures through this. The main point to bear in mind, though, is that it is corrective. In one way or another, once this correction finishes, there will be further downside. Now, we may get a rally back up into a certain point here and then down, or we can pretty much move down with a little move up and then down through here as well. I've just labeled this here as 5 waves down for the A wave, then an A and a B, and looking for a C wave to move up here, but that may not be the case. We may be looking at a triangle as well, and if I go to the intraday chart here, it becomes more apparent. So coming across here, we've got the A wave, the B wave, the C wave, the D wave, and the E wave here, which should be in 3 waves in an A, B, and C here. And currently we've got 5 waves up through here, and this is the same on most markets as well. So you can see that we've got a tricky situation going through here, and it is corrective and should deliver more downside. But as I just mentioned, the scenario at the end of the day is that we have a 3-wave pattern to here and we move down, or the other option is that we have 5 waves up here, we pull back in A, B, C, we get 3, 4, and 5, and then we come down like that. So either way, they're the 2 best patterns that I can see so far. And if I could just get on here on the intraday here on the 5-minute chart, we'll look at this on some of the others. So the current move up through here is in 5 waves, and normally the go or intraday is we'd get an A and a B and a C here, and then we'd get another 5 waves up through here, retesting depending on how far this A, B, C comes as well. If it comes further down here, then it won't go up that far. But the 1800 here, of course, is the resistance. So it is just a complicated situation. Sometimes we know what's going. Sometimes it's clear, sometimes it's unclear, meaning that there's a couple of options to work with. And the same with the Dow. The Dow is weaker than the S&P 500. Where the transports are stronger. I've had a look at all the sort of indices here, and one way or another, it is all corrective. I wouldn't consider this coming back up to the 61.8 retracement level up here, just putting it there because it's textbook sort of stuff. But once again, the 15,800 here was support, now resistance here. So selling new lows would be the go here. It's the same for the DAX as well. We've got this particular pattern here. There's just going to be more of it, but because it's under the thing here is that 5.9 is the tested resistance and 9,000 is the support, the wave 4 of 1 lesser degree. So, and then we're in group 1 here, 1, 2, and 3. So moving into this area here gets bouncy. If the 5.2 becomes a retested resistance, then we'll see the market down at the 9,000 and possibly under that as well. So they've all got the same sort of pattern, the FTSE as well. It's also got the same pattern as well, this 3-wave structure here, but I've labelled this a little bit differently here in terms of down for 1 here, an A and a B and a C here, because if we get support on the medium level here, the 6,500, and I'll just go into that intraday here, I'll go in there a bit further. it does appear like the US markets that we've got an impulse wave up through here and a corrective wave starting through here. So there can certainly be another structure to the upside here. So this is it on a 5-minute chart here. Of course, you wouldn't go long under 6,500. You would need that as support, and preferably the 65.10 as support for a move to the upside. But you can see that we've got a nice third wave in here, a fourth here and a fifth here. So we'd be looking for the A wave may not be finished yet, a B wave and a C wave could pull back to the 61.8% mark. And this is the same for the ASX 200 as well. As you can see, under the 5,200, we've got this pattern that's moving sideways, typically a wave 4, possibly a triangle. If it's going to be a triangle, it's still got one more little leg to push up into wave E here, because we've got a clear 5 waves here. We should get an A and a B and a C here, then it'll push up through here and then a rollover through here. So if that's not the case, then we'd need to look at shorting here. But the thing is that each wave in a triangle, each wave here should be in 3 waves. So some are obvious, like this one here. This has got 2 sets here. It's got an A and a B and a C. And we know, going right back, that little 3-wave structure there, we knew once that is completed, we knew that it was corrective. So whatever happened after that, we know that it's a correction. And it's just unfortunate that it's still going. And that's what wave 4s do. They're just laborious and move sideways and complicated. But yeah, so it's difficult to see the 3-wave structure in here. Here's a little bit easier. This one here is a bit easier. This one here, I'm just not sure that it's completed yet. If we drill into that on the 5-minute chart, we can see that we've got, it's likely to be 1, 2, 3, 4, 5 here. And if that's the case, then we should see an A wave, a B wave, and a C wave here, and then another 5 up through to here, and then down from here. If the 550 here became the retested resistance, then definitely look to short from there. You could probably get in a bit earlier at the 5160, not a breach of it, but a retested resistance that's failed and then moves down from there. And if I just need to explain that, so if the market comes down through the 5160 here, it would just normally bounce like this. So this spike down here, you've got to be very careful about shorting that, because what happens is it comes back up through here. If you don't know the wave count, then just put a line through there, and that would be your trigger down from that point there. That's quite safe. If you got volume, then the move up through here would be on lower volume, and that would confirm to you that this break will come down through here, and that means you could also get in up here as well. So use that sort of tactic at the 5160 if you're wanting to get in a little bit earlier through there. There may be the 3 waves in here, but just at first glance, it does appear to be 1, 2, 3, 4, and 5 an impulse wave. So we'll look for an A and a B and a C, pulling back to the 61.8 retracement level, which will be just in through here. So that would be the support there. Alrighty, cheers.